Hello everyone. Welcome to our today's episode of Macro and Market Movers. Today we have Mr. Yatin Singh with us. He is the head of investment banking department at Emkay Global Financial Services. Hello sir.
Hi,
How are you?
Bhargav. I'm doing good. How are you?
Yeah, great. So sir, let's start this discussion with the overall market outlook first. So in your opinion, what is the investor outlook in the market right now?
So, investor outlook is healthy. I think, the reasons are obvious. We have a stable, very, very stable fiscal position in a relatively volatile world. Our deficits are under control. Inflation seems to be under control and trending downwards. Economy has done broadly well in, again, adverse external circumstances. But most importantly, there is expected political and policy continuity, right? So that is translating into, India being like an outlier performance, and India's, demand increasing from a global perspective. The domestic flows are robust as ever. Our SIPs continue to go up. So all in all, I think the overall investor interest is solid, both in secondary markets, and that kind of rubs off on the primary markets as well, which is why you're seeing IPOs and QIPs in the election season. That doesn't generally happen.
Since we are speaking about this macro view, we have foreign institutional investors who are the major drivers of the market. So what do you think will be the outlook for FII inflows in India in this year?
Historically, FII flows have been extremely important to the overall health of the market, and I'm not discounting their relevance in the present, but the domestic volumes and domestic flows now are sizable enough to kind of cushion some of the shocks that FII volatility used to create in the market. On an overall basis, as I said, right, I think India ranks very high from a medium to long term perspective as far as international investment evaluation goes. But in short term, there you cannot rule out tactical reallocations between markets. So you may have months where India may see an outflow. We just saw that happening in January, right? But those flows then reverse also very quickly. The way I would see it is that we have a solid base which the domestic investors have created for the market. From any market movement from here on, both primary and secondary is a function of actual performance of underlying companies, and as long as they kind of mirror the overall exuberance that the macros show, I think the outcomes will be good.
Well, if we look at the IPO or capital market transaction trend over past few years, historically, ideally it used to be a couple of sectors which used to dominate this IPO market or capital market transactions. But very recently, we have been seeing companies from diverse sectors coming in and hitting the capital markets, let's say jewellery companies and then retail companies, whatnot. So what do you think has led to this particular change in the recent years?
So I think it's a reflection of the overall broad-based health of the economy. Markets, primary markets or secondary markets, they are a slave of earnings. Right? So earlier we used to have significant earnings concentration in a few sectors, and by default those are the sectors which would see flows from either on the existing shares in the market or whenever they came up with a primary issuance. What has happened of late is, and that's an outcome of a slew of policy measures that have been happening over the last decade or so. In some sectors, it is value migration from unorganized to organized, which has been precipitated by DeMon, GST, and other policy frameworks. In some other sectors, it is governments razor-sharp focus on capex, right? So railway-related companies, defense-related companies, those have seen kind of a reboot. They had gone into a period of no real value creation, and they have revived very well now. And the third big bucket is, of course, the focus on manufacturing, right? So PLI, China plus one, so some internal factors, some external factors have created a growth runway for manufacturing companies across the board. So this time it's very broad based. It's not focused on one or two niche segments the way it used to be earlier. And that is what is translating into this broad based activity in primary markets, across sectors.
So also, do you think that are there any major changes in the regulation side which is helping this trend, or is regulations are as they are?
So I think we must applaud our regulator SEBI. One of the reasons why our primary markets and secondary markets do well is because we have a super imaginative, proactive regulator, right? And they of course have conflicting priorities at certain points of time. They want to protect the interest of retail and minority interest investors, but they also have to foster primary flows into the country so that it kind of becomes a force multiplier for the economy. I think they're doing a fine balancing job. It would be unfair for me to pick up individual regulatory developments and comment on them, because as I said, there are multiple perspectives, and certainly personal biases can affect the assessment of a particular regulatory development. But I think comprehensively, SEBI is doing a fine job, and we should all acknowledge that.
Also, speaking about specific sectors, which sectors do you think that we can see companies coming out for fundraising in the equity markets in the coming year?
So we just discussed, right? I think what we've seen in the recent past is activity across sectors. I think in the near term that will continue. You will of course see one of the things that I expect, and it's already happening but will continue in near future, is that the threshold size for going public will come down, because there are many great ideas who may be below the earlier psychological threshold of 2,500 crores post-listing market cap, right? So you'll see younger companies in emerging areas who have a great recent performance and a very robust business plan for near future, them tapping into capital markets, a lot of them coming from the manufacturing segment. That is one major trend that I see happening. But otherwise, we've seen companies across sectors raising capital. We'll see that in the future as well. I think almost all sectors of the economy are going well. We'll continue to see that. So no specific sectoral weightages that are supposed to move aggressively in my opinion.
So now let's come back to our favorite topic, valuations. So much has been going on in the markets with respect to valuations, especially post the COVID season. So what's your opinion about how these valuations are going to pan out, and what are we going to expect in the coming years?
We read in the papers that Indian markets are expensive. When you look at our current year, 1 year forward, index level PE multiples, they do seem to be higher than, say, the other emerging market basket countries on a relative basis, right? That has not deterred investors from continuing to invest. I think India enjoys a unique position of probably being the last large market which can compound at a healthy growth rate over the next 15 to 20 years. Political, angle not coming in the way, right? That's the only thing that can go wrong in it. That translates into its own demand and supply dynamics, vis-a-vis other markets. And the result may be an optically high multiple. But as long as the individual investor is comfortable with the risk-return profile, I think those things don't matter. So we've seen in the recent past that companies who price their IPOs with leaving something on the table for the IPO investors tend to attract a lot of subscription, and also tend to list well and continue to trade well after the IPO, right? I think if there is one template I would recommend to prospective IPO companies is to follow that. It leaves something for margin of error on the table. Let IPO investors make a little bit of money, and then let your performance translate into price appreciation and multiple expansion. That is happening anyways by and large, and I expect that to happen.
Yeah, correct. So you say that if the companies leave something on the table for the investors, there might be more participation from the investors and also more more confidence on the company.
Yeah, absolutely. And again, it's relative. See, what are you leaving on the table is a function of what is the absolute, threshold that you think you would have otherwise fetched from the market, right? Given the fact that our market is in rude health, already the threshold is much higher, right? So you go back 10 years, probably, multiples were a fraction of what they are today. So from a long-term basis, anyways, companies are fetching very healthy multiples vis-a-vis their own past. And hence, maybe again, coming back to the point that, leaving something on the table may not actually be all that bad a thing.
So, since we spoke about the investor sentiment, let us also speak about the promoters and also any private equity funds which are invested in the companies. Let's speak about their sentiment. So, what do you think is happening now? Because of the market sentiment has improved, more number of companies are hitting the markets. Do you see that there is a change in their behavior as well to come public?
So I will separate promoters from private equity investors. I think given the fact that most Indian companies that go public are extremely promoter owned, promoter driven, I see the exuberance getting mirrored with the promoters also, because in fact the company's performance is an outcome of the promoters' presence in that company, right? Of course, the business conditions, etc., also come into play. So I think Indian promoters right now, 99 out of 100 guys you talk to are extremely bullish on near-term future. After a very long time, feel that the regulatory and policy developments in the country are actually facilitating their business rather than becoming an impediment, right? And hence they want to raise capital and grow, and hence they're looking at primary markets. So from a promoter standpoint, I think every promoter who is not listed would probably be planning an IPO in near future. Promoters who own listed companies are also doing follow-on, rounds of fundraising through QIPs and preferential issues. And we also see promoters using this window of high investor interest to create some personal liquidity through blocks, etc. Right? So that should continue. Now coming to private equity, I think the markets have a twofold impact on private equity funds. Both are very different, because a private equity guy can wear multiple hats. In situations where the private equity guy is sitting in a company, I think healthy capital markets is a welcome development for him, because that allows him to unwind his position in his investee company and generate superior returns for his LPs, and also make some carry in the process. There I think private equity funds are very happy. I think the challenge that some private equity funds may, particularly in the growth stage, may experience in near future is that they will have to compete with public markets. Now, because as I said earlier, I expect the threshold for the size threshold for IPOs to reduce, given that we have a big broad-based participation from retail investors in India, either through SIPs or direct investments into the market, right? Now, when that happens, companies who hitherto would not have any other option but to raise private equity, now all of a sudden have an option, which is public markets. And given the differential between the cost of capital in these two markets, I think private equity guys will always lose out on valuation. Public markets can offer better valuation than private equity funds. So I think some of our friends in particularly growth stage private equity funds may not be very happy with what's happening in the primary markets. So that's my
So,
take.
last year you had a very good run in the markets, like your investment banking team. So, how is your pipeline for the next year?
So I think our pipeline is also a reflection of the health of the market. I think given last year, this year is no worse. Maybe it's only better. So our pipeline is pretty healthy, a decent mix of IPOs, QIPs, some private transactions as well, more pre-IPO in nature. And we look forward to the next year.
So, thank you very much, sir.
Thank
It's
you,
a very
Bhargav.
much pleasure speaking to you,
Thank you.
and it is a very informative session.
Thank you, Bhargav.
Yeah,
Thank you so much.
Thank you, everyone.